Hello and welcome to another update video about Bitcoin. Let's talk about the microstructure that we see here right now on the Bitcoin chart. Not much changed, actually nothing changed since the last update. Well, I've added, however, a micro pattern for the white count. So let's talk about it and let's talk about the potentials here that we are dealing with. Really boring price action at the moment across the sector. Today was a bit more friendly, yeah, but let's talk about this ongoing Bitcoin correction. I already posted earlier today for gold members that we were possibly looking here for one more low in this structure. So let's dive into this pattern. Obviously, before we do that, let's take a look at the overall pattern here. The idea is that a third wave started on the 13th of March. We're now in a wave 4 correction. Standard support is between 61.8K and 50.7K. That's the standard support range for a fourth wave. Typically, the ideal support level for a fourth wave is the 38.2 fib level at 55.4K. That should give you the key parameters. That's generally for a wave 4. So anywhere in this orange support zone, we'd like to see a reaction and the start of a fifth wave. I don't expect that yet. Okay, the correction looks unfinished. The clues that we had were that this rally was only a 3-wave move. So that's actually the main clue. And it tells us that we shouldn't really expect substantially rising prices from here without completing the correction, which means without making another low or without maybe forming a triangle. A rally from here, while possible, is not a probable scenario without further evidence. It would be possible as a diagonal pattern, but these are not patterns you can trust or really trade for. We normally want to see a proper 5-wave move up. And then the other clue is we haven't even reached the ideal support, which is the 38.2 fib level, as I mentioned. So 2 clues why this correction is probably still unfolding. Also here, it's sort of, yeah, the retracement is quite strong as well. So yeah, there is currently no evidence that the correction is over. So we have to mentally and also portfolio-wise prepare for a little bit more of a drop. I'm not necessarily talking about, another crash or anything, but actually I'd like to see the price get into this target area down there, which is, in addition to the support area, I specified this target area, which is based on the length of the A wave in yellow. And then we compare that to the length of the C wave. And that gives us a projection. And the key level is normally the 100% extension level, pointing to 59.1K, possibly even a little lower. But that would be an ideal target. So I don't necessarily assume that this correction is over until the price gets into this region between 59.1K and 54.9K, which incorporates the 38.2 retracement as well. That would be ideal. So that's the yellow count in which we should see a move down. There are many, this is the base case, but there are different ways how the price could get there, okay? One example I've shown on the chart, for example, in an A, B, C structure. I just don't have the cleanest micro count to get there. Another situation would be, or another pattern would be a WXY, which is also a very similar structure, but then the Y wave would be an ABC. So this could be an A wave, we get a B wave rally and then come down in wave C. See, there are many ways how we can get there. But until we get there, I don't necessarily assume the correction is over. And also without seeing a 5-wave move up followed by a 3-wave pullback, I cannot confirm a low in place. So I hope I'm very clear. I'd like to see the price go a little lower. What could happen in the short term is the white count, which is a very similar structure, but the wave 4 would finish over here. And it would be a larger A, B, C structure. And we're currently working on the B wave, which again would be an A, B, C. And that's possible. And I mentioned in the previous video, I only added the white count so that you are not surprised if we get a bit of a rally from here. In my opinion, that would most likely be this C wave within a larger B wave. And then we can look for a C wave drop afterwards. Zooming in, I've added a micro count, and it suggests that we haven't seen the lowest point here in this decline, which started on Sunday. I've got a small A wave down, I've got a B wave, and then the C wave is only a 3-wave move. 1, 2, 3. This could be a 4, and we could get one more low, possibly. Okay, which means, in other words, one more low is expected at the moment in the micro. It means that somewhere from here, the white count could start a rally, ideally after one more low. To make it very clear, I think it's best to frame it in a way that I say, I don't expect the correction to be finished until we get into this 59.1 to 54.9K area, but I'm going to watch for indications of a rally, even only temporary, in this region, and especially around the 63K level, which is the 78.6 retrace. That's sort of how I would like to frame this, and that's, I think, the best way to deal with this structure. And yeah, I think that's it. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.